Hey, this is Rajat Bose here. We are now coming out with our weekend stock review and market outlook. This time we are actually going to review stocks which we have covered in the first 5 episodes. We are going to do that in detail with charts, with figures, and we are also going to give you market outlook for the 3 indices that we normally do. What will be absent this time is that no fresh recommendations this weekend, because the market is in a seesaw mood. So let it stabilize a bit. Maybe there would be an occasion middle of the week when we can come up with a fresh recommendation. Paying heed to your request, you have been requesting for a review of the recommendations. Now is the time we are going to do it. This time what we are doing is that we are taking the first 5 episodes of our stock recommendations. Stocks would be reviewed in that, and we are going to do it today. So we start with the first recommendation that we have given. First stock is PNB. If you remember, we have given PNB a buy recommendation. It was late April. The stock was trading at 52.30. After that, we have actually given a target of 59 to 61. PNB did move up, but it could not cross 56, 57 kind of levels, and still it is seesawing. But our stop loss had been 45.90, and PNB, give it time, it doesn't move very fast. So I still believe that PNB would cross our target levels of 59 to 61. You got to hold on, but do not forget the stop loss. What I would like to emphasize here is that if the stop loss is hit, exit the position, but re-enter once it turns around, re-enter once the uptrend resumes. Late April, the second stock that was recommended was another bank stock, that was State Bank of India. This stock was recommended at 576, and the stop loss was given at a much lower level of 539. 589 and 620 are the 2 targets that have been given. These targets, 620 has not been met. State Bank, again, because the bank stocks have been suffering for the last several weeks, even State Bank would take some time to reach those levels. Suffice it to say that you continue to hold on to State Bank, keeping the stop loss or your purchase price as your stop loss. You can do that, and those targets of 589 and 620 going forward would surely be met, but you got to be patient. But again, I want to re-emphasize that if your purchase price is hit, that means it is going to go below your purchase price. Exit for once, buy again once the trend resumes, once the uptrend resumes. Axis Bank. We recommended Axis Bank. Around 870, and the stop loss given was 858. Axis Bank is one of the stocks, the 2 targets, that was 909 and 969, have both been made. What I would like to emphasize here is this: whenever you see both the levels or the target levels have been met, book profits, wait for lower levels, maybe you can buy again. But for now, if you haven't booked your profits, I would suggest booking profits in Axis Bank at current prices. We are now going to cover the 3 indices that we normally do: Nifty, Bank Nifty and CNX Midcap. So we start with the Nifty. Nifty has closed at 18,665. This week, the foregoing week, the week gone by, we have seen one thing. I have never seen such a thing in my life, that coming close, even within points, the Nifty came to post a new high. Sensex did, but Nifty didn't. 18,887, the high that was posted on 21st October 2021, this time, twice during the week, the Nifty came very close. Once it was 18,885 and once it was 18,886 point some decimals also. But we did not cross 18,887.50. So it was an interesting week, but out of the 5 trading sessions, 3 had been down sessions, in the sense that the open was higher and the close was lower. We are going to discuss the Nifty chart very soon. I'll display the chart, then you will see. What you now see is the Nifty YTD chart. We begin our analysis with this year-to-date chart. It gives you data from 1st of January till current date. It is clearly visible that the Nifty, there had been 3 red candles and 2 green candles this week, and the Thursday and Friday, the Nifty fell quite a bit, from say about 200 points or so. The significant thing that is to be noted on this YTD chart is that for the first time, the Nifty has breached the 20-day exponential moving average. The 20-day exponential moving average was at 18,668 and the Nifty has closed at 18,665. So this is the first breach. There had been an intraday breach on 19th of May, but the close was 100 points higher then, but this time the close is 3 points lower. That is very significant. Now you can see last 1 year price movement in candlestick patterns, as well as the Bollinger Band is there. So now it is very clear that after the 20-day exponential moving average was breached on 31st March, it was taken out by the Nifty. After that, it has tested the 20-day exponential moving average but never gone below that. So almost 3 months after that, for the first time, the Nifty falls below the 20-day exponential moving average. This is to be noted very, very clearly, because this is the first weakness, definitive weakness signs in the uptrend that we have been enjoying for the last 3 months. Now we are going to the 125-minute chart to get a magnification as to what has been happening. Just as the 20-day moving average has been breached on the daily chart, on the 125-minute chart, the 50-unit moving average has been breached. 50-unit moving average has been breached today. It was tested early on, first couple of hours. Again, in the last couple of hours, it closed. The 50-unit moving average in this chart is at 18,675 and the closing price is 18,665. That being the case, that we now know that this is another weakness sign. Now we are going to the weekly chart. Weekly chart gives you a perspective. Weekly chart shows that the uptrend that began from late March, it's still continuing. Yes, there had been green candles, there had been red candles. We have seen that the last week had been a strong green candle, and again we see that it is followed by another red candle. This time the Gann angle has actually resisted again. So this Gann angle, for the last 7 weeks or so, it is basically acting as a resistance, although it's a dynamic resistance because the Gann angle is upsloping. although the uptrend is continuing, but because of this Gann angle resisting it, so long as it does this way, that is also fine. But the problem is that with the daily and the 125-minute chart has shown some weakness signs, we need to watch out for the 9-week moving average, that is at 18408. So 18408 to about 18255, this range will be very crucial for roughly 18400 to 18250 would be the very crucial range, crucial support range for the Nifty. If it were to break down below 18250, then we would see that, we would think that the uptrend is very much in danger. If you look at the 14 RSI at the bottom, the first oscillator is 14 RSI and the lower oscillator is the MACD. The 14 RSI is showing a negative divergence, although the October 2021 high showed a reading of 67.29. This time the high of the RSI is at 65.57. So there is some weakness there as well. We need to keep that in mind. So this coming week will be a very important week because we need to see whether the Nifty falls below 18400 to about 18250 support zone. If that support zone is taken out, then the intermediate uptrend would be definitely, it would be in danger for probable termination. Now we come to Bank Nifty. You must have noticed one thing. This is the index that is actually playing the spoil sport. But surprisingly, towards the end of the week, the Bank Nifty somehow managed itself to remain within a range and it did not fall below its 20-day moving average. So what happened was that Bank Nifty traded between say 44,000 and 43,600 kind of levels, but it did not show a breakdown below say 43,200 or something. As I have been telling people that 43,000 to about 42,800, unless that range is taken out decisively, Bank Nifty uptrend is not going to get terminated. So let's see, we are going to show the chart and say there will be 125-minute chart, there will be YTD charts, and we will study the Bank Nifty in detail. Now we come to the Bank Nifty. We start with the YTD chart of the Bank Nifty. YTD chart of the Bank Nifty shows that for the last 5 sessions, the Bank Nifty has been range bound between 44,000 and 43,500. If you go back 2 more candles, then you will find that this is between 44,100 and 43,400. So roughly you take it that 800 points, or you take this 500 points kind of movement. This is continuing. Now the interesting part of the story is that now the 9-day and the 20-day exponential moving averages are resisting the Bank Nifty while the lower Bollinger Band is supporting it. This is a situation that happens in a downtrend, but the price movement suggests that it is actually a sideways movement, not yet a downtrend. But the most important thing to note here is the orange colored moving average. Orange colored moving average is the 50-day moving average, which closed on Friday at 43,322. If 43,300 gets taken out, then there will be considerable weakness. But as I have been telling others, telling people that 43,000 to about 42,800, this zone is the major support zone. Of course, the 50-day moving average level of 43,300, that is also very important. So 3 important levels to remember: 43,300, 43,000 and 42,800. If 43,000 to 42,800 major support zone gets violated and pierced in on heavy selling in bank stocks, that means the bank nifty terminates its uptrend, intermediate uptrend. Now you look at the 1 year end of day daily chart of the bank nifty. It gives you the perspective as to how the last 1 year, how did the bank nifty move. Bank nifty moved from much lower levels of around 3,100, then went all the way up to say something like 44,151, and from there it came down. Bank nifty, of course, in this upswing breached the all-time high of 44,151 to post a new high at 44,498. So that is the kind of scenario. But also we see the projectile formation or projectile kind of movement that bank nifty daily chart is showing. That is actually a distribution pattern. So bank nifty is more likely to go down and test at least 42,800 going forward. So just as what we noted earlier, that 43,300, 43,000 and 42,800 are the key support levels to watch out for. And if 44,000 on the upside, if 44,000 is breached, then we need to see if 44,500 or that is 44,498 is retested or not. If that happens, then the sideways movement has actually given way to fresh bullishness, but probability of that happening is much lower. I tend to think that it will actually come down and test 42,800 going forward. Bank Nifty 125-minute chart actually shows the same thing. The projectile formation that we have talked about earlier also, that projectile formation is very clearly visible on the 125-minute chart. This is actually to amplify the chart formation, and the distribution pattern is much more clearly visible on the 125-minute chart. The most important thing about this chart and the data points that we find here is the cyan colored moving average. That is actually 200 unit moving average on the 125-minute chart, and that is currently located at 43,051. So this level, so roughly 43,000 assumes a great importance even on this chart. Just keep it in mind that our three important levels are 43,000, 43,300, and on the downside 42,800. The weekly chart of the Bank Nifty actually shows that the 9-week moving average of the Bank Nifty is at 43,435, and as we know that 9-unit moving average is the one that is the most crucial one in the short term, and if that gets taken out, that shows the weakness signs, and if the further lower levels after 43,435, the further lower levels as we have noted as 43,300, 43,000 and 42,800. So if 42,800 gets taken out, that would signal that Bank Nifty uptrend, intermediate uptrend has been terminated.
CNX Midcap 100. In my commentary all these weeks, I have been mentioning that CNX Midcap is going great guns. It was moving within the channel formed by the +2 standard deviation or the higher Bollinger Band, higher 20-day Bollinger Band, and the 9-day exponential moving average. Never before 9-day exponential moving average was taken out by the CNX Midcap since April. Once it did go below that, but it did not close below that. But this Friday, the 9-day exponential moving average has been decisively broken, and now it is about to test the 20-day exponential moving average in the coming week, that is around say 34,400 kind of levels. This is a new development. First there was a spinning top on Wednesday, then there was a big fall on Thursday in the mid cap index, and the mid cap
suffered badly again on Friday, and it closed at 34,800. 34,800, now it is coming closer to 34,400 to about 34,300, where the major support is located. We need to see what it is going to do, how bad it has become. We will even discuss the weekly chart and tell you as to how we look at the CNX Midcap for the coming week. Now we are taking up the CNX Midcap 100 index. This is the last of the three indices. Here what we see is that we have seen a very strong uptrend, very strong uptrend that began from level was 29,200. From there it went up last week. The high was 35,744. To my understanding, we probably have had a top in the CNX Midcap index, because I was not expecting CNX Midcap to go beyond 35,500, but it has already tasted the level of 35,744. Now I think there would be at least some kind of a correction in which the 9-week exponential moving average of 33,525, that might be tested. Now 1 year daily chart, things become much clearer. How? Just look at the right hand side. The one-way traffic that we have seen right from early April. The midcap index continued to move up. It tested the 9-day exponential moving average first time on 19th of May. Prior to that, this index, it didn't even test the 9-day exponential moving average on an intraday basis. Even that 19th of May test was an intraday test, because that time the 9-day exponential moving average was at 32,531.80, and the same day it closed at 32,550.35. That is a cool 19 points higher than the moving average. So there was no breach, and the upper Bollinger Band, 20-unit upper Bollinger Band, 20-day upper Bollinger Band was actually acting as the resistance, while the 9-day was never even tested. It was moving across, moving up, touching the upper Bollinger Band most of the time. So that was the kind of strength that it showed. Only in the last couple of days we have seen that CNX Midcap Index came down very sharply. What happened is that today on Friday it fell 435 points, and on Thursday it fell 379 points, roughly more than 800 points. More than 800 points is something like 2% plus fall. This kind of a fall CNX Midcap did not face at all. But just by looking at the CNX Midcap index fall 2% in 2 successive sessions, one might say that it should not be concluded that the uptrend is in danger. Actually, the thing is that the RSI also posted high 21st June, that was Wednesday last week. It was 89.16. It's a very high reading. This means a very strong uptrend has been in operation. But my senses are telling me that the critical Fibonacci levels close to about 35,500 to 36,000, those Fibonacci levels are now in operation, and they are sort of giving an indication that at least some fall is likely to happen here, where the index might come down to 34,200 kind of levels. Now look at the 125-minute chart. This also shows that CNX Midcap is about to test the 50-unit moving average here, and it has given a downswing which has first breached the 9 unit, then 20 unit moving averages, and then there is a bearish crossover between the two, and finally it is very close to the lower Bollinger Band and the 50 unit moving average, which is now located at 34,647. That is likely to be tested. So 34,200 might be a possibility, if not 33, if not below 3400, and it could, once it goes below 3400, it might well come back to test 33,300 kind of levels. If you like my presentation, then please press the like button, share it with others, subscribe to my channel, and do not forget to press the bell button so that you get all the recommendations from YouTube for every video that I post. On the day we began giving stock recommendations, we were very over enthusiastic. We gave 4 stocks, and this is the 4th one. It was also a bank, ICICI Bank. I thought that ICICI would perform better than Axis, but actually it so turned out that Axis did well, but ICICI met only the first target of 938. It went up to 960, but it is still to get to that level of 975 or higher levels of 1028. That was our third target. However, ICICI Bank is far away from its stop loss levels. My suggestion is, if you want to book profits, you can do that, because bank stocks are showing some weakness. If you want to do that, go ahead and do it. But once you see that the trend has resumed, definitely do buy it again. Otherwise, just stay put, sit tight. ICICI Bank, Axis Bank, State Bank and PNB, all 4 banks in the first episode that we have covered, I would suggest you can continue to hold on. Our 5th stock is Bajaj Finance. Early May, 4th of May, we came up with 2 recommendations. The first one was Bajaj Finance. I was quite over optimistic, somewhat too confident, but ultimately Bajaj Finance did not let me down. Why? Why did I say that I was a bit over optimistic? We recommended it at 6,400. Around the level of 6,400 we recommended, and we placed the stop loss at 5,980, and my targets were quite ambitious. 6,990 was my first target, 10 points below the 7,000 mark, and the second target was 7,480. 7,480. How did Bajaj Finance perform? It did a stellar performance, met the first target of 6,990 without much ado. It was a phenomenal performance by Bajaj Finance over this period of 2 months. However, Bajaj Finance met its resistance around 7,400. The high posted was 7,398. So you can understand that my second target of 7,480 has not been met. Does it mean that it would not be met going forward? I am confident it will, but it may take time. Meanwhile, it is consolidating around 7,000, between 7,000, 6,900 to about 7,400. After that, once the market resumes its uptrend, even Bajaj Finance will meet its second target of 7,480. My suggestion is, whatever trailing stop loss or profit booking level you have in have it in mind, keep that. But stay put with the position. It is likely to move up, but if you find it's going down and you want to book profits or get out of the position, you can always do that. That's totally up to you. Life Insurance Corporation of India. Remember when I said that I have never recommended LIC. Always I was negative. I was telling people that it was the IPO came at a very high price, but we fortuitously or not, whatever, we actually latched on to LIC at a very low price, 561.90. Believe it or not, our stop loss was only 12 points and LIC did not let us down. It moved up. It actually met all the three targets, 566, 577 and 589. Mind you, it did not stop there. It crossed 600. It went up to 630 or so. Now it is consolidating. LIC is correcting, but LIC has not become weak. So here again you can stay put, you can book profits. It's totally up to your choice. If you like my presentation, then please press the like button, share it with others, subscribe to my channel, and do not forget to press the bell button so that you get all the recommendations from YouTube for every video that I post. If you recommend 12 stocks, there will be some stock that will let you down. And you know, I had a lot of faith in this stock that this is a new kind of a thing, it will perform. I am referring to IEX, India Energy Exchange. India Energy Exchange, IEX. What happened? Why did it suffer so badly? It went down to levels like 111. Of course, we had a stop loss of 148, and I told you that if 148 is taken out, you should get out of it because that is the stop loss. I have always been mentioning that stop loss should be paid heed to. Now it is around say 125, but I would say don't buy this stock right now. Why? What has happened? The con call transcript suggested that the futuristic thing is still in the future. It will take quite a bit of time for its promises to become reality. So IEX is actually a dampener. It just didn't stop out. It went down. It went down to 135. It went down below that. It bottomed out at 111, went up, and again in the last couple of sessions it started dithering too. So my point is that this is one stock that you should not remain invested, and I hope you have already paid heed to the stop loss, or at least you got out of this position without losing any big amount. That's it. Mind you, this will always happen, that there will be one stock which will actually let you down in a big way, but this is a game of probability. Some stock will do that. We have to take it in our stride. Dixon Technologies. This one is the biggest winner out of all the 12 stocks. We recommended, believe it or not, I have never been able to do such a thing for myself. Just when the flatbed accumulation is getting over, at that point of time, it was by sheer luck. If you ask me, did I know that the very next day it would start shooting up? No, I didn't. But I felt that this is the time to give it. And I did. 3035 was the level where we recommended Dixon Technologies. Dixon Technologies, we gave a target of 3800 to 3850, and we said it is the medium term target. Medium term. It did that in a few weeks. It crossed 3800, 3850. It went up beyond 4000. It went up to 4400 kind of levels. Just imagine. It's a phenomenal move. It is the best performer. Want to book profits? Well, I would suggest you can always do, but do not sell the total holdings. Why I tell you, if a stock gives such a stellar run in a very short period of time, throughout my 30 years of experience, I have seen that you should book at least part profits, because the consolidation may take much longer after this kind of a run. So I would expect you to book part profits and stay invested in Dixon. Dixon is a great blue chip. You can continue to move on, and at lower levels, if you have booked profits earlier, at lower levels you can buy again. This has been a long episode and you have stayed with me. I'm so very happy. Thank you so much for being with me and listening to this review. It would be to your betterment.